14-year high on that. And again, it's as investors, Tim, maybe are paring back their expectations in terms of what the Fed does, in terms of starting to either stop or cut rates.
I see what yields are doing, and I immediately go and I look at the average mortgage rate here in the U.S. If you look at the bank rate, 30-year average fixed rate mortgage here in the U.S., it's the highest it's been, going all the way back to the year 2000.
Says the person who's buying a house.
Trying to. I mean, I don't know if that's going to happen anytime soon with mortgage rates like this, but you know, we're not actually seeing housing prices in a lot of areas of the country come down as a result of it.
You got to arbitrage that, Tim. I mean,
how do I do that, Roman?
7% mortgage rate, and you get 5% on short-term Treasury.
All right,
you do the math, man.
Romain Postic, the mortgage broker.
All I need is a ton of cash. That's all I need.
Well, yeah, I mean, that's
the only
sort of
thing
the
I'm
catch.
missing.
I mean,
that would solve the problem.
You basically got to take your what are you looking for? Like $3-4 million house? Is that what it is?
Yeah, totally.
So you take that, just put the other half right into short-term Treasuries, and you're set, man. You're good.
All right, I'll be back. I'm going to go do that right now. While you guys do this.
That is not financial advice, by the way.
Don't follow that. I want to go back to what Carol was mentioning earlier, which of course is U.S. Steel and the multiple bids now emerging for the company. Cliffs had come out with a bid that was rejected by U.S. Steel because it was unreasonable, insufficient, although its unions did like it. And now S-Mark has come out to bid for $35 a share in cash.
Yeah, I mean, I guess you're just going to end up with an auction at some point here. I mean, obviously, there's something there people like, and I think it raises a lot of questions here about the viability of the U.S. steel industry, a U.S. steel industry that we know has been just completely gutted over the years. I mean, you've gone from several big players to basically what is now effectively 2 or 3.
Yeah.
And perhaps that's why there won't be any antitrust concerns when you see consolidation like this, because the U.S. government and regulators would say, wait a second, U.S. companies need to do this to go up against China.
Yeah, it's just kind of fascinating. And I think, Romain, you make a good point. If we were concerned about regulators, I mean, this whole idea that there's been so much consolidation. China was a big player, but it'll be interesting to see where this ultimately lies.
I go back to the unions for a moment, because Joe Doe, our reporter here at Bloomberg News, said that the reason they liked Cliff's bid is because they don't want to be sold to private equity and they don't want to be sold to China. They're worried about their jobs, and they think that they'll be able to keep their jobs with Cliffs as the buyer.
Yeah, I mean, I'm fascinated by this story because you consider sort of all of those steel companies that we used to have, all that production we used to have. You go through the Midwest in Chicago, you go through Pittsburgh and those areas out there, and where are all those mills now?
They're remade into lofts.
They're in Asia. They're in Latin America. They're gone. I mean, have we talked to Wilbur Ross yet today?
Really good point.
No, it's a really good point, yeah.
Distressed assets, right? And that was certainly a big thing. Hey, all right, guys, we'll probably continue this conversation. I know it's certainly one of my gainers when we come back in less than an hour's time. We'll continue our cross-platform on the markets. We're going to count you down to the close on this Monday. Radio, TV, YouTube, and Bloomberg Originals. Join us for Beyond the Bell at 4 p.m. Wall Street time.
You don't want me anymore. Won't you let me explain? 'Cause I don't want to lose you. You don't want me anymore.
All right, everybody, a lot going on. We're going to stick with that now second offer for U.S. Steel. And so let's get to it because he's had a really busy day and it ain't stopping. S-Mark offering to buy U.S. Steel now for $35 a share in cash. Let's get to it with Bloomberg News Metals and Agricultural America's Deputy Team Leader, Joe Doe. He is joining us on the phone as we speak. Hey, Joe, so another offer. Put it into context, these two offers, and is one better than the other?
Hey, I got to be honest with you guys. I mean, this is real fresh and hard to tell just at a quick look of it. I mean, listen, S-Mark, you have James Bouchard. James and his brother Craig Bouchard have been around the steel and aluminum industries for a long time. At some point, they were also involved in, they wrote a whole book on Caterpillar, the Caterpillar Way. I know the guys. As for James Bouchard's offer here with S-Mark for $35 a share, it's certainly competitive. Again, we need to be really careful here with this bit of news. I mean, nobody's had time to look over it. I've already gotten a few text messages and a couple calls from people who are aware of it, having just come across the wire. I mean, 8 minutes ago. I think the first question that anybody is asking is, how are they going to finance this deal? And that's as much as I can say at this moment on S-Mark. But here it is. They've made this public. It's probable that U.S. Steel, when they came out yesterday, said they have been approached by multiple parties for unsolicited offers for part of or the entirety of the company. This might have been one of the groups, but we don't have a confirmation for sure. If that's true.
Well, Joe, let's take a step back then and talk more about the context here. Why does U.S. Steel suddenly find itself the belle of the ball?
Well, I think I don't like the cliche, but there's a bit of a perfect storm, right? You have a company that was struggling for the better part of a decade. Up until 2017, when I first really started covering this space, there were real discussions about whether or not U.S. Steel would become a bankrupt company. And a large part of that is because they continued to operate these old integrated steel mills that had a lot of work that needed to be done to them, right? I mean, Mon Valley is a steel mill that dates all the way back to Andrew Carnegie. I mean,
wow.
it's like the steel mill, right? And then Dave Burritt comes in 2017. He makes his big splash in 2015 and buys what is called Big River Steel, which is an electric arc furnace. It's the new technology that remelts scrap and turns it into new steel, and he doubled down on that. He effectively said, we're transitioning this company away from an integrated steelmaker to an EAF. So everybody has looked at this and said, okay, listen, U.S. Steel has made a pretty good bet here. They've gotten it up and running. Big River Steel is doing very well. The doubling of capacity is on its way. Those assets look to be in pretty good shape. And the other reason they're in good shape and they're so efficient and so wonderful is because they're making automotive-grade steel. And that's the steel business. That's the margin, right? If you've got automotive customers, those are 5-year guaranteed contracts that you're making, and you know that you've got a buyer, and it's the highest grade stuff. So everybody's looking and saying these assets are looking appealing, and frankly, they've still got the integrated assets on the balance sheet that I'm sure a lot of folks have different ideas of what they would do with those assets themselves if they had them under their own portfolio.
Joe, I think it's so funny in a era of a 3-month-old era, it feels like that what we increasingly talk about is artificial intelligence and chips. That's what makes the world go round and round. Steel still makes a lot of things in this environment.
Yeah, and steel itself is becoming more and more automated, right? Steel making. I mean, there was all of that talk during the Trump years of, well, what happened to all the steel jobs? Well, the truth is all the steel jobs became automated. It wasn't the steel industry was shrinking and going away. In fact, the United States steel industry is an incredibly strong industry. We make 120 million tons of steel per year. 65% of the steel that we make in the United States actually gets consumed in the United States. If you are comparing it on the globe for a market you want to be in for steel making, the USA is one place that you want to be. And that's the other appealing part of these assets that U.S. Steel has is they make money.
54%. The automobile, according to the American Iron and Steel Institute, steel currently makes up about 54% of the average vehicle, Carol.
Yeah, I mean, there's a lot of chips, but there's a lot of steel. So, Joe, a deal is going to get done of some sort, whether it is Cleveland-Cliffs, whether it's S-Mark, or is there somebody else who could come in at this point?
Well, listen, there could be. U.S. Steel did say yesterday, they started all this off by saying they had multiple parties come with unsolicited offers for parts of or the entirety of the business. So we don't know who all those people are. They haven't said. Like what we said at the top of the call, we don't know if S-Mark was one of those people, but we do know others are out there. And now we have 2 on the table that are making offers for the entirety of the business. So we still don't know who's been offering for parts of the business and what parts they've been wanting.
Who else could come in here? Go ahead,
So we
Carol.
could see multiple pieces be sold off in different deals?
Yeah, and guys, there's a lot of rumors out there.
Okay.
I've been hearing them since yesterday. I don't want to throw anything out there because it's pure speculation, but there are a lot of different names and a lot of different places being thrown out there by people in the market, and frankly, I think it's all coming in at once. And people in the market, close to the market, are trying to figure this out in real time.
All right, Joe, just real quick, any names from outside of the U.S. being bandied about that you're comfortable saying?
Not that I know of.
Okay.
Good luck, kiddo.
Yeah, get back to work.
We'll be tracking
Just
all
kidding.
of your writing.
Thank you very much for taking the time during this breaking news.
Bloomberg News Metals and Ag America's Deputy Team Leader, Joe Doe, here in our Bloomberg Interactive Brokers studio. Fast and furious for him, and it's also been fast and furious for our Liz McCormick. She's Bloomberg News Chief Correspondent for Global Macro Markets. She's trying to keep track of this Treasury trade, which has seen a lot of volatility creep back into it. Liz is joining us here in our Interactive Broker studio. Liz, thank you so much. There is a lot going on. 10-year yield. We're talking about the highest level in months. Real yield, 14-year high. I know, you're crisscrossing your eyes. Is the move today significant on its own, or is it just more of the same that we've started to see in the last couple of weeks?
Yeah, well, I think although we've come off the highs, which is somewhat kind of relieving, not that I have a trade in the game.
What's been our high on the 10?
The nominal was like 4.2 and change,
Okay,
you know,
okay.
but the real yield was really high. And
Yeah.
but I mean, I think it came off Friday. The momentum just continued into today. Like I said, we're off the highs of the day, but you know, we had that kind of not so wonderful 30-year auction and PPI, which isn't usually the thing we all talk about, but that was a little stronger. And I think, you know, people just got the bug in their mind about, which is kind of good in a way, fiscal issues and more supply and debt and deficits. And
Are those real problems that we shouldn't brush aside?
yeah, I think the way I put it, because some people tell me, like, take a chill pill. We've been talking about deficits since I was in grad school, and I don't want to talk about how long ago that was. But
They were talking about climate change too, and everybody poo-pooed us a decade ago.
Exactly. But I think, you know, I was saying to someone, the Treasury Department began this quarter, and most of Wall Street thinks it'll be for the next several quarters, having to ramp up the size of auctions. So that's a tangible fact. You know, of course, part of it is because the Fed's rolling bonds off, but the deficit numbers are worse. Treasury has to borrow more to finance our debt. So I think that's building is in the periphery. One of the other forces in the long end rates that could raise term premium and things like that to make investors a little more weary. But I think there's also this, which I'm sure you've been talking about too, the feeling that, well, maybe it is true the Fed's going to be done soon or not, but then not be able to cut so soon. The market's kind of like saying, you know, pulling back the cuts a little bit for next year. And I think that's weighing on the marketplace a lot.
So if there's one thing that's sending yields higher, do you think it's the idea that this is higher for longer?
I think that's the biggest thing, you
Less
know.
about concerns about the economy?
Well, I think soft landing adds to that, right? The economy doing okay, not having a recession, let's just say for now, right? And that those recession calls are pushing back. So a better economy, inflation has come down, but I was just reading Larry Meyer, former Fed governor, wrote a note about like that 3% story that he doesn't think, you know, we're going to get from where we are now on like important inflation measures like core PCE and things like that as quick as many people think, that it's going to be stickier. So, you know, economy being stronger adds to stickier inflation. And I think the market kind of buying, you know, oh, maybe these Fed officials who keep saying we have to do more, and more could mean just stay higher for longer. That's restrictive, right? You know, so I think that, and then you add those technicals called supply, you know, term premium, outlook, all those kind of things. And it just kind of, remember for a while we were like, wow, rates, the peak is over, rates are going down, and like the world changed again.
Fool me once.
Exactly.
It is kind of wacky. What's your next? I mean, I know Jackson Hole's next week. It was so funny. I heard Tom this morning. He's like, oh, yeah, Jackson Hole's in until next week because we do this silly thing of like 3 weeks out, start to count down to it. What's your next focal point, especially when it comes to the Treasury trade? And you can say Jackson Hole, we won't get crazy.
Well, no. I mean, Jackson Hole's my next point. But right now, me and some of my colleagues like Eric Boston in D.C., great reporter for us, and Chris Condon covering Treasury. We're trying to put our brains together and do something that gets to, you know, how much do debt and deficits and all this matter? And Eric is saying, boots on the ground where he is in D.C., you know, Democrats are going to still want to spend more. Republicans want to cut taxes. So he's saying they're not going to do a lot to reduce the deficit. So it might be the market flashing slowly that we do care about this. So that's what we're looking at. And then Jackson Hole, what do they have to say to us?
You know, it's actually like, you know, really exciting in your world, Liz. Like, I look up on the TV today, and she's there every moment I look up. Liz is like, I'm like, do you get time to report anything today, Liz?
I know. I said I can't do my daughter said, how you doing? I'm like, I need a little time to do my day job, you know.
Well, after you come on radio with us.
And can I say you look great? You look like summery and so like.
Thanks. I had a little spruce up a little, you know, come in the office.
We love you all the time. Liz McCormick of Bloomberg News.
stories, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:21 on Wall Street. We check the markets for you all day long here at Bloomberg. Stocks are mixed in the battle for U.S. Steel. Well, it is on S-Mark, announcing a public cash and exchange offer for all issued and outstanding shares in U.S. Steel, $35 a share. That's the price that they're offering. Earlier, the iconic Pittsburgh-based steel mill rejected a takeover offer from rival Cleveland Cliffs. Cleveland Cliffs trying to create one of the world's biggest steel makers. The CEO of Cleveland Cliffs, Goncalves, tells us today he thinks his offer will prevail.
I think it's we are right there on price. I think I made an offer with a 43% premium. That's very unusual in the M&A world. That was a recognition of what not only what U.S. Steel has done so far, which I commend them for doing so, but also the ability to extract synergies. That's what I'm bringing to the table.
Now, it's interesting. Goncalves is also telling us he is personally overseeing this takeover attempt. U.S. Steel, for its part, says it is undertaking a strategic review after getting multiple offers. Shares are up about 38% right now. They were up 32% before S-Mark's offer came in. The Dow right now, it's lower, though, down about 0.1%, down 40 points. The S&P 500 higher by about 0.4%, 16 points. The NASDAQ up 0.8%, 108 points. The yield on the 10-year creeping higher again, 4.19%. It was as high as 4.21, though, earlier today. Spot gold, it's lower, down 0.3%, 19.07 an ounce. And crude oil right now down about 0.9% at $82.47 a barrel. And that is a Bloomberg Business Flash. Carol and Tim.
It certainly is. Denise Pellegrini in there for Charlie Pellet on this Monday. Denise, thank you. So, you don't have enough to worry about. Add this, and we keep talking about it because I think it's always important when you're talking about China, one of the largest and most important economies, market economies, economic economies out there. We did have some stories about China's largest private wealth managers triggering some fresh anxiety about the health of the country's shadow banking industry after missing payments on multiple high-yield investment products. You know, now we've been concerned about real estate, right, Tim, for a long time, and now it's almost like the fringes of the financial system. You're wondering, okay, what's the impact of this?
There's also the question about foreign investors, Carol. They're losing interest in China as the number of active China-focused hedge funds has slipped for the first time since at least 2012. With only 5 new funds launched this year as of June. That's according to data from Preqin. And another 18 funds, Carol, were liquidated according to the data.
Well, our go-to on China here at Bloomberg, Tom Orlick, Bloomberg Economics chief economist, lived in Beijing. He's joining us right now, though, on Zoom from our Washington, D.C. bureau. Tom, thanks again for joining us. We know we've been leaning on you a lot. The latest news overnight from China and one of their top private wealth managers missing that payment to investors. Walk us through this and the significance of it.
So there's a line in the Barbie movie, Carol, which goes something like this. Barbie realizes a bunch of bad things has happened to her, and she says, some things are going on and they may be connected. And that's kind of how I feel.
First of all, I love you that you used a Barbie reference. You are endeared to me.
You know your audience,
incredibly.
Tom. That's amazing.
Let's hope we can steer clear of an Oppenheimer reference before the end of the interview.
Please.
So what are these connected things? So first of all, we've got this really, really serious crunch in China's real estate sector. A couple of years ago, we had Evergrande, the big developer, defaulting. Guess what? There's an even bigger developer, Country Garden, which now appears to be on the cusp of missing payments to its lenders. So that real estate crisis is rumbling on. And of course, the real estate sector is intimately linked to the financial sector. And so now what we see is the first signs of that extreme stress in the real estate sector starting to trickle through to the financial sector with this big trust company. And in China, trusts are financial institutions which take money often from rich investors and channel them into high interest rate loans, often to property developers. We've got one of China's biggest trusts saying, you know what, we're not going to be able to make our investors whole.
So my question, Tom, for you is about politics here. and what the Chinese Communist Party is doing in order to prevent widespread disaster?
So there's a really big challenge for the Communist Party here, and that is that real estate is really overbuilt. China's just got too many houses. And so the obvious short-term fix here is to say, you know what, we're going to open the liquidity spigots, we're going to flood the real estate sector with liquidity, get more lending, and boost real estate demand. But the risk is that if they do that, they just make that fundamental problem of oversupply in the real estate sector that much worse. And so what Xi Jinping and China's leadership seem to be doing is attempting to put a floor under the pace of decline in the real estate sector without reinflating it.
You know, I was reading in, I think it was our live blog, either overnight and stuff, and someone weighing in, the latest news more like noise and less like a signal. How do you see it? You've lived there, you understand this market. Is this just some more noise, or is this something more substantial, a substantial signal perhaps?
So the collapse or the risk that Country Garden, one of the biggest private developers in China, might not be able to service its debt, that signals that the real estate crisis is now taking another leg down. The big unanswered question, and I think this comes to your point, Carol, on whether this is noise or signal, is what happens on the pass-through to the financial sector. Mm-hmm. Yes, we've got this trust company saying to its investors, we can't make you whole, we can't give you the money, the returns that we promised you. But trusts are a kind of an eye-catching part of Shadow's financial, an eye-catching part of China's shadow financial sector. They're not the main show. So the thing which I'm going to be looking for to sort of distinguish between whether this is noise or signal is if we now start seeing problems passing through into the mainstream banks in China. If that starts to happen, if we see the banks getting into trouble, that I think would be the time that would be the kind of the panic signal on China's financial stability. We're not there yet. That's the risk we'll be looking at in the months ahead.
What about the risk of contagion, Tom? Carol mentioned it at the top of the program today. I saw the headline a little earlier. What do we need to know if these start to spread beyond China's borders?
So we're already seeing the real economy contagion, if you like. China's real estate sector is the biggest driver of demand at home, but it's also a significant global driver of demand, right? If you're mining iron ore in Australia, if you're mining copper in Chile, then you're selling to the Chinese real estate sector. Your fortunes are tied to how much construction is happening in China. So that piece of the global contagion story, that's already well underway, and we see the China real estate slump hitting global commodity prices. The outstanding question is this going to be a financial contagion as well? And my instinct there is probably not, for a couple of reasons. First reason is China's financial system is vast, but it's domestically contained. There's not a lot of foreign money in China, and so when China's property developers default, there's pain for a few people who are holding the dollar bonds, but most of the pain is confined inside the Chinese economy. The second big reason is that the downturn in the Chinese real estate sector, it's really been a long time coming. People have been warning about this for a decade. People were shorting Evergrande for years before it defaulted. So yeah, there's pain for the mainly domestic investors holding the property bonds and related stocks and other financial assets. But for the world financial system as a whole, people have had quite a long time to prepare for this downturn.
You know, it's funny as you talk, Tom, it made me think of Jim Chanos, who for such a long time, right, years ago, was talking about the Chinese ghost towns and I believe shorting the Chinese property markets. I mean, in many ways, he wasn't wrong, right?
So I'd be really interested. I'd be really interested to know if the people who were out there a decade ago talking about the looming collapse in the Chinese property sector, if they managed to hold on to their short positions all the way to the end, right?
Yeah.
Because, yeah, they were right. The people talking about the unsustainable investment and the overcapacity in China's real estate sector were right back in 2010, 2011, 2012, when this narrative started to take shape. Did they have the conviction and the finances to hold on to their short positions all the way through to the 2020s when those positions would have started to pay off?
Yeah, very
Big
different.
question.
Very different from the U.S. financial crisis, right? Just how long the demise or the troubles within Chinese real estate. Tom Orlick, I heard you this morning on surveillance. I am so glad we were able to once again bring you back and share you with our audience, because you really just did a great overview there. Tom, be well. Tom Orlick, he's chief economist at Bloomberg Economics, lived in Beijing, knows the country well, on Zoom from our Washington, D.C. bureau. Yeah, right?
Yeah,
Good story.
and it is. And,
Just
you know,
something you have to keep
it's
on
kind
your
of just
radar.
the beginning of our China coverage this afternoon.
Yeah,
We're going to do a deep dive a little later in the program. We got Andy Purdy coming from Huawei.
Yeah.
So looking forward to that.
And someone who worked in the public sector in the U.S. government, security issues, now working for a giant Chinese tech company that has been embroiled amid all the controversy, right? So I'm curious what he has to say about everything.
It's always good to catch up with him.
Yeah, I feel like we have a lot certainly to go through. So we're going to catch him in our 5 o'clock hour. All right, right now, let's catch Nancy Lyons. She's in D.C. just like Tom, but she's got an update of world and national news. Thanks, Nance.
Sure thing, Carol. There is mounting pressure on former President Trump ahead of a possible fourth indictment, this time in Georgia. After a 2.5-year investigation, the Fulton County District Attorney has been presenting her case to a grand jury today. CNN over the weekend was reporting the DA has text messages and emails that directly connect members of Trump's legal team with a voting system breach in Coffee County, Georgia. Greg Bluestein is with the Atlanta Journal-Constitution.
What we know is that several members of several Trump allies and data specialists were granted access to the Coffee County Board of Elections. That they were seen on surveillance footage. They spent a few hours in there copying sensitive election data. So investigators are diving deeper into what that means and if they broke any laws.
Greg Bluestein with the Atlanta Journal-Constitution speaking with Bloomberg Sound On. 6 white former Mississippi law officers pleaded guilty today to state charges for torturing 2 black men in a racist assault back in January. Prosecutors say some of the Rankin County officers involved nicknamed themselves the Goon Squad because of their willingness to use excessive force and to cover it up. Trent Walker represents one of the victims.
To my knowledge, never in the history of Mississippi have, in particular, white officers been held to account for brutality against black victims. To my knowledge, this is the first time that this has occurred. So we're certainly happy about that.
Walker says he's hopeful prosecutors will continue to investigate the Goon Squad. More than 300 FEMA personnel are now assisting with wildfire relief and recovery efforts in Hawaii. That includes staffers who are visiting displaced families, staying at shelters. They're working to help survivors register for assistance. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 3:41 on Wall Street. We check the markets for you all day long at Bloomberg. I'm Denise Pellegrini. Stocks are mixed. And for more now, we're going to send it over to the First Word breaking news desk for today's afternoon call. And our Bill Maloney. Welcome back, Bill.
And good afternoon, Denise. That's right. U.S. stocks trading mixed right now, with NASDAQ outperforming. Dow is lower by 42 points. S&P's higher by 17, while the NASDAQ is up by 114. The U.S. 10-year yield at 4.19%. Gold is down 6, oil trading in the red, and Bitcoin is off by 0.3%. Among the main 11 S&P sectors, leaders were tech and telecom. NVIDIA rose 6.7%, while real estate and utilities were under pressure. Leaders to the upside in the Dow, Intel, Salesforce, and Merck, while Goldman Sachs and 3M led to the downside. And in deal news, S-Mark offered to buy U.S. Steel for $35 a share in cash. In other news, Hawaiian Electric plunged a record 42% on worries its power lines may be linked to the Maui wildfires. And wrapping things up, Getty Images reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Denise?
All right, thank you, Bill. And to hear live breaking news over your Bloomberg, type SQUAK on your Bloomberg terminal. U.S. Steel, as we move toward the close, it is up 38% right now, and that is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody. Just got about 18 minutes left in today's trading session. Getting ready to wrap up the Monday trade. Carol Master along with Tim Stanovic. And delighted to have with us in studio Katie Kaminsky, Chief Research Strategist and Portfolio Manager at the RIA, Registered Investment Advisor, that focuses on diversification strategies. We're talking about Alpha Simplex Group. Katie here in our Bloomberg Interactive Broker studio. So nice to have you here. How are you?
Good.
How are we doing in terms of the markets?
To be honest, it's a little bit hard to tell. It's a little boring. I don't know about you guys. Can I say that? Am I allowed to say that?
The treasury market's not boring.
Yeah.
But I agree with you. The equities are,
Wait,
kind of going meh.
Do you think treasuries are boring too?
Treasuries, I've been waiting for treasuries to move for months.
Well, wait no longer.
Even more.
Okay.
Like where? Like what?
I think that people, what's interesting, we were just talking, there seems to be this dichotomy. The street is saying short fixed income, yields have to go up. When is this going to happen? So I've been waiting for a steepener all year. I think people are starting to come around. I think the asset management business is still long duration and thinking about that. I think the big move in the next couple months to think about is fixed income. Think about it. Why do you want to own a long-term bond when you can get such a good rate in short-term bonds?
5% on the 2-year.
Yeah.
So wait, where do you expect the moves? Is it the whole yield curve? Is it the 2, the 5? Like, what is it, and how high do you expect us to go? And what fundamentally gets us there?
So what's great is we don't actually have a fundamental, we have a more technical approach, but the fundamentals behind it is that people need to be paid a risk premium for holding things that are affected by inflation. So think about long-term debt. Mm-hmm. Who wants to own a 10-year or 30-year bond when inflation looks like it's going to be sticky?
Right.
And if it's sticky, then you don't want to own those, so those yields need to reprice. Why haven't they repriced yet? That's the question we keep asking.
I feel like, you could be saying this to regional banks, a few months ago, right? Like they're the ones who found themselves in this situation holding these long-term mortgages and declining in value. Okay, so how much more is the yield curve going to move, and where is it going to move more?
I think it's probably going to move more on the long end of the yield curve. So we're going to see a steepener eventually when we start to see that people realize that inflation will be stickier longer. Thus, they need to reprice that long-term debt.
Is that why you think the 30-year didn't go as well as the... Sorry, and I interrupted.
Yeah, no, that's exactly the point. Now, I think what's fun is we kind of almost had a smile today. So it's like the treasury curve is smiling at us, like the 30-year is trying to break out at the end. And I think what it's going to take is people realizing, just like they realized in Q1, hey, we should buy short-term treasuries. At some point, they might also realize, wait a minute, the yields are too low on the long end of the curve, and we need to see that curve move because growth is sticky enough that we're not going to see rate cuts quick enough for that idea that we're going to go back to lower rates that those 10-year and the 30 years are rightly priced.
So where do we go for 10 and 30?
I mean, I don't like to usually give a specific point. That's sort of our trend view. But I do think we could see, a multi-sigma move eventually when the market actually realizes it. Because you're starting to see more people having a short view and starting to say that.
So a yield on 10-year of 5? 6? Wow.
Why not? Risk premium, duration.
No, that kind of makes sense to me because I do think coming out of the pandemic, and I do think folks wake up. Structurally, there are fundamentally, there are things that are changing in our world. Whether it's climate change, whether it's globalization, whether it's deficits, like our aging populations that I think we don't quite know the full impact of. And we're not quite sure what a post-pandemic world that is burning up, getting older. Sorry, happy
That's a
Monday,
down Monday,
everybody.
Carol.
No, but I just think fundamentally we're going through the shift. I think we'll get to a better side at some point, but that churn is a little uncomfortable.
Okay, so
a lot uncomfortable.
connect the bond market to the equity market and where you see the equity market going.
Well, here's the interesting thing. The equity market and the bond market have completely disagreed with each other this year. And it's been so strange to see that those themes basically don't agree. And now we're starting to see the bond market, if we do see that steepener, then we're starting to see some agreement, if you think about it from that perspective. And I've often said, and we've been saying this for quite a while, if we're going to see a bottom or a recession, we need to see the bottom of that bond market first before we could actually see any repricing in equities. The only thing that investors are going to have to worry about is long-term bonds yields moving up. That has implications for firms that have duration exposure, such as tech. So we're going to have to think about the type of rotation that you might see as a function of that.
So what's diversification in today's environment for you guys? And I know, it depends on the client. I know. But come on.
Time horizon too, Carol.
Yeah, I know. Past performance. No, come on. Katie, there must be some big trends when you guys think about diversification right now.
Well, see, that's where it's good that you point this out, is that we also trade a lot of currencies and we trade commodities. And what I found interesting in this last 2 years is we've seen this cycle where commodities were a big center at the beginning of 2022 when we had the Ukraine conflict.
Yeah.
They've died down. There are murmurings right now about energy prices popping back up again. That is something to watch because one challenge with inflation is it moves, and it moves through asset classes in different waves and at different frequencies. And I've been waiting for quite a while for another leg up in what might have been a massive bull rally in commodities that would cause that cycle to reverberate again. And that's what inflation does, it cycles.
So you're saying commodities are something that might be interesting for investors going forward?
Being able to be long or short commodities through some of these super cycles that we might have has been an interesting diversification from a P&L perspective. To be honest, although the dollar and currencies have been really hard this year to trade, they still have provided also some more interesting diversification as well. Take the yen. It just bottomed, and we've been short the yen for 2 years.
We've been talking about it a lot today, especially
and
the move in the
people
dollar.
keep asking us, are you keep shorting it? It's been a great trade.
Katie, where do you stand on recession call?
Good point. I was definitely one of the recession callers earlier this year saying the same thing. Like, look at the data. We probably see something was particularly focused on the fixed income market.
There's no more seats in the recession room because everybody was calling.
No, but they've left.
I know. Well, now there's tons of seats.
Yeah.
Right?
So my view is if you follow the bond market said recession most of this year. If the bond market, ironically, if the bond market bottoms, maybe that's when we can start actually seeing some recessionary-like behavior, repricing based on cash flows over long horizons. So maybe that recession trade is on pause as we wait for what actually could be challenging, and I think it's fixed income.
Yeah.
Don't forget the yield curve is still inverted.
Yeah, I mean, yeah. No, I think I agree with you that either been too early or too late. And I think I worry about the signals right now. Katie, so great to have you here. Safe travels home. Katie Kaminsky, Chief Research Strategist and Portfolio Manager at Alpha Simplex Group, based in Boston, but lucky for us, here in our Bloomberg Interactive Brokers studio in New York City. All right, folks, the close coming your way in just a moment.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm Denise Pellegrini. We got to start with U.S. Steel because shares, they are almost 38% higher, 37% higher right now today. That is after getting a second takeover offer. This one is a $7.8 billion all-cash offer from a company called S-Mark, and that does trump an earlier bid from Cleveland Cliffs. S-Mark isn't saying, though, how it intends to fund that offer. iPhone maker Hanhai cutting its outlook. That's after mobile demand sagged. We get more on what's happening there from Bloomberg's Gina Cervetti.
Denise, Hanhai Precision now expects 2023 sales to fall. That's after previously forecasting flat revenue. This could be a flashing red sign about demand for the devices it makes for Apple and others. The Taiwanese company now expects most of its main business segments, including smartphones, to contract slightly this quarter and over the entire year. It also reported a larger than expected 30% slide in quarterly operating income. Apple is Hanhai's top customer, and Apple has already telegraphed its longest sales slump in decades because of crumbling demand for phones, computers, and tablets. China is the world's biggest market for those devices, and it's mired in an economic funk. Denise?
All right, thank you, Gina. Bloomberg's Gina Cervetti reporting there. Meantime, Amazon will be meeting with the Federal Trade Commission later this week. This is a final push to avoid an antitrust suit. The FTC has been investigating Amazon since 2019 over its online marketplace for third-party sellers. And those are some of the company stories we're following for you this hour. I'm Denise Pellegrini, and this is Bloomberg.
This is Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
All right, everybody, you're listening and watching Bloomberg Business Week. Just a few minutes, we're going to head over to our TV colleagues to wrap you up for the Monday trade. In the meantime, Zach saying, Elon, the time has passed.
Yeah, so, okay, this is interesting, Carol, because Elon Musk cannot let this go. I don't know if you followed this at all over the weekend, but he sent Walter Isaacson, his biographer, a text
Tim,
message.
I actually have a life.
Exactly.
Sorry. Love.
You know
No, I'm just kidding.
You know who doesn't, I guess, is Elon Musk, because he's sending Walter Isaacson texts in the middle of the night.
Well, he does that a lot. Didn't our team, was it Dana has talked about? I think like Elon just kind of tweets it.
Well, wherever
Anyway,
he is in the world.
Go ahead.
Yeah.
So what did he tweet?
He showed him a text message between Zuckerberg and him, and he's like saying, okay, Zuck, I'm going to go to your house on Monday. I'll be in Palo Alto. And guess what? He's been tweeting about it all day. And Alex Heath over at The Verge reached out to Meta spokesperson who said, because Elon said that he's going to like show up in a Tesla and knock on Mark's door and they're going to do a fight.
Mrs. Zuckerberg is going to be like,
and
we got stuff going on.
Meta says, quote, Mark is traveling right now and isn't in Palo Alto. Also, Mark takes this sport seriously and isn't going to fight someone who randomly shows up at his house.
What? Burn. I mean, if only Elon had 1, 2, 3, a few companies to run.
Oh, I thought you were saying kids.
Oh, well, I don't know.
He has 10.
Does he really have 10
Yeah.
kids? Wow.
Yeah.
Wow. That's a lot of kids. Doesn't he have stuff to do?
He does.
I don't know.
But this is another story that I want to talk about.
You want to talk about the fertility research?
Yeah,
don't
he
you?
quietly gave $10 million to Texas for fertility research.
Yeah, he's worried about the dangers of population collapse.
He's fathered at least 10 children, our reporters say.
I like that, at least.
It's all
No
we know
offense,
of.
you can't really round off a kid. Can you?
Among-
Approximately 10 kids?
Well, we don't know them all.
It's not like, being a little bit pregnant. That's a joke.
He's very concerned about
Yeah.
population decline.
He's probably not wrong because we do see, first of all, aging, population and families having less kids. I'm one of 7. I had neighbors across the street who had 10 or 11 kids. Sorry, we lost count. I mean, big families, 4 were the norm. That's not the way anymore.
I wonder what this grant is going to do. This is at the University of Texas, Austin.
I would argue that Earth is kind of also telling us, guys, get your act together, otherwise I'm not going to be able to support you.
Yeah, good point.
That too. All right, don't go anywhere. We're heading over. Join Scarlett and Remain. That's because Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlett Fu. We're counting you down to the closing bell. Here to help take us beyond the bell. It's a global simulcast with Carol Masser and Tim Stenivek. Live and direct here on a Monday afternoon. Welcome to our audiences across Bloomberg Television and Radio and our partnership with those folks streaming on YouTube. Carol Masser, happy Monday.
Happy Monday.
Somewhat tepid day here in the markets, but we should point out, I think the last time we spoke to you, we had a lot of red on the screen. All of the major indices right now, with the exception of the Russell 2000, poking into the green.
Poking, and you're seeing some buying into the close here. Both the S&P and the NASDAQ look like remain that they're at their highs of the session. I'm looking at the stocks, though. Really some outperformance there, 2.8% to the upside. I'm going to talk about NVIDIA in my movers in just a moment, but that's where you're seeing investors move into big time, Tim.
Yeah, hold that thought.
We just spoke to Katie Kaminsky over at Alpha Simplex Group, and she was kind of complaining that the trade has been a little boring, and I brought up, hey, what about the bond market? And she was like, the bond market, I'm still waiting for the steepening to happen. She thinks the 10-year, the yield on the 10-year could hit 6%.
6%?
6%.
When?
Multi-sigma move
Yeah,
is
when?
what she
That's
said.
a key question. I mean, that seems a little extreme, but it's certainly in line, at least the trajectory. Most people seem to say that we're headed at least towards 5. Mm-hmm. Yeah.
Yeah.
I said
There
the
you go.
steepening's happening.
Is it?
Yeah, it looks like it if you look at the chart.
Yeah, I guess it depends on what you're looking at, Tim.
Yeah, well, that's been
Yeah.
the consistent security of the day, looking at the rise in yields. I know it's not by a lot, but the direction of travel is certainly something to keep a close eye on.
All right, we're getting the closing bells here in New York on this Monday afternoon. We should point out, and there's going to be an asterisk next to this, as volume is pretty much light across the board, across the tape, so down roughly about 20% from where we would normally be. The Dow Jones Industrial Average has spent a good portion of the day in the red. Looks like it's going to close in the green, higher by about 27 points. The S&P 500 higher by about 26 points, or 0.6%, while the NASDAQ Composite is going to close out the day up by about 1%. It's been in the green for a good portion of the day here, largely led by some outsized gains by NVIDIA. The Russell 2000 lower on the day by about 0.2%.
All right, as Romaine said, light volume, though, on this Monday in August. If you look at the S&P 500, almost scarlet and even split. 238 names actually gaining some ground today. 263 to the downside, 2 unchanged.
All right, and let's take a look at the sector performances here, because you can really see the mismatch. The best performers of the day, semiconductors and semiconductor equipment companies gaining a collective 4.3%. And then you have media entertainment gaining more than 1%. In fact, you have 4 sectors gaining at least 1%. On the downside, autos and components, that's Tesla, losing ground by 0.9%. Utilities, banks, household, and products, personal products also down by less than 1%.
All right, folks, let's get to some of the individual gainers. We've been talking about it all day, and the news continues to cross. Romaine was talking about the S-Mark CEO saying that U.S. Steel, the bid funded from cash on hand, so it looks like that they can fully fund it, at least according to comments to our own Bloomberg News team. Having said that, U.S. Steel up about 37% at the close here, just off its highs of about a 43% gain. You know the deal. First, you had Cleveland Cliffs coming in with a $7.25 billion bid for the company, and then you had S-Mark just, within the last hour or so, coming in with a $7.8 billion bid. So good to be the belle of the steel ball, if you will. And we're waiting to see how it all plays out. Having said that, I feel like that was an unusual gainer. Who would have thunk that that was going to happen on this Monday in August? At the same time, a big gainer is WeWork. Again, another who'd have thunk. That stock was up 30% at its highs today, finishing with about a 9% gain, rallying for a third straight day, heavy volume.
What's the share price?
Yeah, okay, give me a moment. It is a 22-cent stock.
Okay.
It is still down about 98% from its all-time high back in April of 2021. I did my homework just for you, Romaine, because I knew you were going to be there.
Yeah, you know.
But it's up. I mean, I know. It's kind of a meme stock again, right? It just feels like people are playing with this. Remember, it was last week when the company said substantial doubt on it, continuing as a going concern.
Wouldn't it be great if all the meme stocks just combined into just one big Voltron?
They'd be worth
bad
$2,
businesses?
right?
Like
They'd be worth $2.
a holdco of
Yeah, why not? AMC,
We could have a
Tupperware.
meme SPAC.
I like that ticker,
WeWork.
HODL.
Yeah, there you go.
What's the ticker?
HODL.
Oh, yeah.
There's ETF took that already, right? Okay.
How about
Continue?
MES?
How about NVIDIA? Let's do a large
NVIDIA?
cap stock.
Can
for
I
a
do
change.
NVIDIA? Oh,
Yeah.
stop that. All right, number one in the S&P 500. Number one in the S&P 100 and the NASDAQ 100. Morgan Stanley analyst Joseph Moore expecting upside to the company's recent quarterly revenue forecast hike. It's his top pick, he said, among companies expected to benefit from AI. He says a recent sell-off, it pulled back about 13% or so, saying that that's a buying opportunity. He's got an overweight and a $500 price target, guys, $437 and change. Company reports August 23rd after the close, so we'll be breaking that down.
Tim, did you notice that deep breath she took? My mother used to do that to me when I was a kid, and I knew I was in trouble.
Yeah, I wonder what that means. I wonder what that means.
All right, let's go to the decliners. I had to double check these to make sure they were, a couple of them are still in the red, including Tesla. It did end up finishing the day down by 1.1%, 1.2%, let's call it that. The company cut prices again in China, marked down the long range and performance versions of the Model Y by about $1,900. Those reductions are about a 4.5% and 3.8% off the cost of those cars. The concern is this could spark another price war, and indeed we did see this come after Geely's Zeekr brand lowered its prices by a little bit quite last week. So the question is, are we going to see a price war in China or continue to see a price war in China? Shares lower on the day. And then this is like the concerns of PG&E all over again. Hawaiian Electric Industry is falling by 33% today. This over concern that its power lines may be linked to the deadly Maui wildfires. We should say that Hawaii Electric said it doesn't have information on the possible cause. And officials say they haven't determined what triggered the blazes. Close to 100 people have lost their lives in those fires. And then AMC Entertainment finished it down by more than 35%. This is the common shares, not to be confused with the ape shares, which were higher on the day. So you were asking about an arbitrage opportunity, Romaine, earlier in the program. This is your arbitrage opportunity, okay?
Yeah,
those
that
common
was-
shares versus those preferred shares.
Yeah, that was certainly a big trade here, I guess, and I assume the judge has finally sort of put an end to that here. Let's take a look at what's going on in the yield space, because that really was the tail wagging the dog today. The 10-year yield at one point here on the day did trade at 4.2129 here, and we should point out that's actually the main point of resistance, and it got batted down from that here. So at least on a technical level, maybe some argument to be made that yields only have so far that they can run. You're right now at 4.1894 on your 10-year yield. That's about 3 to 4 basis points higher than where we were on Friday. You're up about 7 basis points on your 2-year yield, and on the longer end of the curve, you're only up about 2 to 3 basis points. So a bit of a flip-flop, Scarlett, of kind of the moves that we saw over the last couple weeks in the Treasury space, where it was those long-term yields that were outperforming the rest of the market.
But for now, it's pretty consistent. Yields higher across the curve there. And of course, the real yield has made the U.S. dollar very attractive once you factor in inflation. I want to go back to U.S. Steel, because I think we're all kind of intrigued that this bidding war has kind of come from what feels like nowhere on a sleepy Monday afternoon, with Esmark, this privately held company, now saying that you can fund a $35 a share bid. We were kind of wondering, Romaine and I earlier, where are they getting this cash? Apparently they have it.
Yeah, I mean, they say they have it. It's fully funded here. I mean, we're basically talking about roughly $8 billion that they would have to come up with. But I think there's a broader question of and I think Scarlett got it, like why now? I mean, it's one thing when Cleveland Cliffs comes out and says, but now you have two companies basically bidding for, let's face it, a company that at least on the surface you would think probably wouldn't necessarily have that luster.
Well, and what's interesting, that's a really good point. We talked with Joe Doe of our Bloomberg Intelligence team. I mean, this is a company that's already got, some steel holdings. But he also said, don't rule out maybe somebody else coming in as well, or the company maybe selling itself off in pieces. So he said we've got to be very careful as these headlines come out.
And the other thing, though, too, I mean, I think, I don't know if it's Tim or someone brought it up during the last simulcast about the potential antitrust issues.
Yeah, I did, yeah.
But this is going to be one of those deals where the government's really going to take a close look, not so much just because of competition, but you talk about breaking it up here. I mean, there's not a lot left in this country when we talk about a reliable, high-quality producer of that cold-rolled steel. And if you start breaking it up here, you're going to have a lot of companies out there, meaning, auto suppliers and appliance manufacturers are going to say, wait a minute here.
Where was everybody, though, 20 years ago?
Well, look, you still have over half of a car in the U.S. is built with steel. A lot of that does come from American-made steel, Joe reminded us. And the thing is the industry, it may be a lot smaller than it was years ago, but Joe was arguing that it's a lot of it's because of automation. A lot of the tasks have actually been automated over the last few decades. So
really, well, ask him about production levels, domestic production levels versus the foreign production levels and what we import.
China.
Yeah,
but that's why I say, Romaine, right? Like, how long have we been talking about this? This industry was just destroyed. It was such a part of the U.S. economy.
I always remember, it's several years, I used to cover these companies way back when, and I remember going to a U.S. Steel, and this was like 20-something years ago, and they had this gigantic plant right outside of Pittsburgh here, and you know what they used that plant for? Car commercials. You know those big car commercials where they drop like a bunch of steel into the back of a pickup truck? That was literally it. I mean, they still had some production there.
Even 20 years ago.
But they were basically, they had this huge facility that they just didn't really need anymore.
Yeah. But so it'll be interesting to see who comes out, like whether it's car makers here in the U.S. or folks who are building things like that. They want to make sure that we've got some kind of domestic footprint here to make sure that they have access and ease of access.
Just one note, James Bouchard runs Esmark. He used to work at U.S. Steel a number of years ago. So it's a small industry, and he knows the company well.
Yeah. No, and I think they've got a steel, right? They've got a subsidiary, within, I guess, all of their investment holdings. So to be continued, no doubt about it. We'll be talking about this probably throughout the week. All right, guys, that's a wrap. Yay, Monday almost over. Our cross-platform coverage, radio, TV, YouTube.
We got 2 more hours, though.
Bloomberg Originals. I know.
Fun's just getting started.
I know. We will see you guys tomorrow.
Can't stop the money from trickling out, but we can control how it flows. And we can start by being aware of where the money goes.
We are definitely finding out where the money goes. In fact, just crossing the Bloomberg terminal, we got an update on what Berkshire is doing in terms of its investments, what it's let go of, what it's bought into. The latest 13F filings, they are fast and furious, and we've already gotten a lot. And what's great about it is backward looking, but it nonetheless gives us an idea of what some of the great investment minds are thinking about. So we knew when that came out, and God, man, I always wonder if she ever sleeps because she's constantly putting out just information, research, reporting to keep us all smarter. Bloomberg News, Wall Street reporter Sonali Basak here in our Bloomberg Interactive Broker studio. I mean, man, you were commenting on 13F filings. You had PayPal naming a new CEO. There's a lot going on. Let's start with the 13F filings. What do we need to know?
Well, one thing I'm looking at, what we didn't have this morning that we now have, are the results here, or the filings for Tiger Global. This is the big hedge fund run by Chase Coleman, a Tiger Cub, and a very big technology investor. Something interesting we're seeing, there are only 2 new positions, and he sold out of 17. And I think the sells are as important as the buys here. You have him selling out of MasterCard, Apple, Block, and you have him buying into new positions, including Eli Lilly and Novo Nordisk. Now, listen, it's interesting to see him out of such big tech names for such a big tech investor. In fact, they really were a net seller of technology overall, and that is very against the grain when you look at the rest of the industry. We really saw global funds, sovereign wealth funds, family offices, hedge funds buying into tech during the second quarter. Relative to anything else, they were almost selling most other types of industries there.
He did buy Meta, though. He did buy Take-Two. He did buy NVIDIA, right?
It increased those positions.
Or boost,
yes,
okay.
Yeah. So he
Okay.
already had Meta, and he added a little more. He added a little in NVIDIA. But those are the ones they sold out of. For him to get out of MasterCard completely, get out of Visa completely,
Okay.
Block and Apple, that's what we're talking about here. Because, you know, if you're trimming or buying on the sides, it's more a matter of kind of position management, maybe taking some profits.
But they got pummeled last year, Sonali.
Yes, they certainly did. And so this is a more of a unique example, because what happened to these hedge funds is some of them lost so much money last year that their kind of dry powder, you call it, that excess money to spend this year is not as robust. So I want to talk about somebody else, somebody who has a lot of money, and that is billionaire Stanley Druckenmiller, his Duquesne family office. Remember, Stanley Druckenmiller has been known to be quite a bear.
Right.
For the last, let's say, several months at least. If I'm not specific, I get in trouble about things like that.
Among a few months.
Right.
handful of months
But
ago.
certainly, remember, he was on the Bloomberg Invest stage with us just a couple months ago and still bearish. He increased his positions by 21 new positions and sold out of 60. So you do see Stan Druckenmiller, billionaire family office type, nipping at the heels of the market and certainly finding big enough opportunities.
How would you describe the themes that you're seeing emerge in this latest batch of 13Fs?
So I like to use that Duquesne and Tiger example. Why is that? Because when you look at the fast money on Wall Street, you've always thought the hedge funds. But many of these hedge funds have kind of closed up and become family offices instead. And what has that given them? That has given them the ability to be on their own. They don't answer to other investors.
Right.
And so I find the most nimble money to be among the billionaires, because they don't answer to anybody else. They sit there and they make their own decisions with their team. And so for them, and let's look at just Duquesne.
They're only accountable to themselves ultimately, right?
Exactly. And so therefore, by nature, you're faster money, aren't you? Because you are not accountable to that investor base. I will say that example I gave you of Tiger Global is not what we're seeing everywhere. Let's talk about Coatue, for example, a different Tiger Cub, where they added 23 new positions and they increased their holdings of, almost 24 of them. They sold only out of 6. And so you're not seeing that kind of net selling pressure. To Tim's point, last year it was sales, sales, and more sales. This year you are seeing buying. And you see it in the market too. You see long-only funds being the best performers of the hedge fund world. You see the market also rising. You see tech performing, and you've seen these funds really ride the wave of that as well.
Is there anything that you saw crossed in a headline and you're just like,
Yes, a few things. One is we have been watching how people use ETFs. I think one of the more interesting wagers, Soros Fund Management, we're talking about billionaire family offices, one of their buys as of late, and they kind of added more here, is LQD, which is a corporate bond ETF. The reason I find that interesting is because when we talk about the markets, it's so, the inclination is to talk about stocks. But what's interesting is, and our producer Dan Curtis pointed it out to me, LQD is an ETF. It got a ton of excitement.
Corporate bond ETF.
Corporate bond ETF. The ticker is LQD. This is the iShares iBox investment grade corporate bond ETF. The interest soared during COVID when you saw that corporate bond rebound, but then it tapered into 2021 and 2022. But what you've seen since the equity market topped, a lot more interest came back into corporate bonds. And so it has been a fairly interesting trade to watch investors take on bonds, corporate debt, in the means of a ETF, which is an equity holding. It is more liquid and easier to get in and out of. So that's been a popular one. One of the most bought securities overall, maybe not surprising, is the iShares U.S. Treasury Bond ETF. That is GOVT. And, so how boring, right?
Full-facing credit.
Exactly.
But it is interesting at a time when we just talked with Liz, right, about concerns about debt.
But
US debt.
It's interesting they're buying these bond funds rather than just going straight into treasuries and buying treasuries.
It is so simple to get in and out of funds. And I think back to the conversation we had earlier today with a manager over at PIMCO, where they're creating even more ETFs and products around the idea of trading short-term treasuries of different types and really managing those portfolio of bonds.
Carol, you brought up Warren Buffett, and I thought that's where you were going, Shonali, when you said another
I did
billionaire.
too. That's where I thought she was
But
going to go.
we did get an updated 13F from Warren Buffett. Here's some headlines here. Shonali,
Just
I know you
crossed
haven't
after the
just
close,
crossing.
right?
I know you haven't had a chance to read these yet. Berkshire Hathaway reducing Chevron stake by 9.3 million shares. Berkshire Hathaway boosting Capital One position by 2.5 million. Berkshire Hathaway reporting a new D.R. Horton stake, so bullish on home buying, it sounds like. 6 million shares there. The company dissolved its stake in Marsh & McLennan Companies. My question for you, Shonali, and look, this could be a curveball, but I just find it interesting that Berkshire Hathaway, which is a publicly traded entity, communicates its holdings via a 13F like this.
Well, so yes. Well, because they are a big, essentially, they buy so many stocks that they have a fund. Listen, if you have 100 million of U.S. equities or more, you're required to be disclosing 13Fs. And so people think about 13Fs about being about hedge funds, but really every major fund manager with a holding of that size is required to file a 13F.
100 million shares?
$100 million worth, I believe.
Wow.
Right, because if you
So
think about
many.
Berkshire is in some names, one of the, among the top holders of an entity,
Apple,
right?
Yeah.
Occidental Petroleum. The
And
list goes on.
frankly, think about how much they have in cash sitting on the sidelines and how little they're spending on the U.S. equity market relative to how much they have. And so, to your point, they are one of the more interesting buyers. But this is why when I talk about the hedge fund universe, I try to broaden those 13Fs out beyond. You can go into the sovereign wealth funds too. What are international, government funds buying from the U.S. equity market? You can get that data as well. And we can make that big plug for it. It's FLNG Go on the terminal. And you can type in any fund in the world that you want to find and get that data on what they're buying and selling.
Yeah, and then, you could just stay here all night just reading the filings.
I think Shonali might do that, and that's how she knows so much about this.
So glad. My guess is we might reach out to you later in the week because there's just so much going on. I mean, whatever happened to quiet summer?
It's been a busier summer than usual, and that's for certain. People are now working from anywhere, so you can be doing this job on your terminal in the middle of Croatia or Slovenia, I heard. I'm not even kidding. Fund managers are doing that.
All right, Shonali Bossack, Bloomberg News Wall Street reporter, thank you so much.
Connection lost.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:21 on Wall Street. We check the markets here right after the closing bell on Bloomberg Radio, and we check the markets all day long here at Bloomberg. Stocks finished higher in the end. The Dow was lower for much of the session, but squeezed out a gain at the close. Tech, though, was the big winner of the day. And Ben Laidler, global market strategist at eToro, says he's really bullish on tech right now.
Look at the earnings season we've just seen. Where did the growth surprises come from? Where did the absolute growth come from? It came from all these sort of tech-heavy sectors, consumer discretionary, communications, and IT itself. I mean, these are secular growth sectors, which are seeing some top-line growth, but are also had a lot of fat to cut. And I think you're beginning to see that come together. So to the extent that U.S. equities get led out of this earnings recession and this earnings trough we've just seen, I think we've got the sort of glimmers of hope that it's tech that's going to lead. And on the valuation side, I think bond yields back off, and that'll take, I think, the ceiling off valuations that you've had put on over the last month or so.
Well, there you have it. That's the bull case on tech from Ben Laidler, global market strategist at eToro. And indeed, the NASDAQ, the big winner of the day, up more than 1%, 143 points higher. The S&P 500 up about 0.6%, up 26 points, and the NASDAQ up, and the Dow rather, up just fractionally, squeezing out a gain of about 26 points. The yield on the 10-year creeping higher again, 4.19. We'll call it 4.2% if you round up. That's close to the highs of the day. NYMEX crude, it was lower all day, and it's down about 0.7%, 82.59 a barrel. Spot gold down about 0.3%. Shares of U.S. Steel about 37% higher after getting multiple takeover offers. Home Depot kicking off a big week of retail earnings tomorrow. Those shares closed lower. Walmart and Target, they report this week, they closed lower as well. Shares of Apple, though, up almost 1%. A lot of talk about the new Apple Watch coming, but you're going to have to wait for it, guys. Just put, what can I say? Just put the 2024 date for it in your Apple calendar and go about your business. And that's a Bloomberg Business Flash, guys.
Can't wait. I need a new one. All right, we're going to see.
You might actually, well, that's the question for Mark. I won't give it away.
Absolutely. Denise, thanks so much. All right, so Apple is set to release its next line of smartwatches like it usually does when it releases a new iPhone in September. This year's watch, though, folks, not going to be that different. Same sizes as the current models. Most notable differences will be faster processors and fresh colors, and that's according to our own Mark Gurman, who covers Apple for Bloomberg News.
And if you were to get one, Carol, it would actually turn on and the battery would work.
Yeah, my battery's like pretty pathetic.
All right, but we're looking beyond September. At 2024, even 2025, that's when Apple's planning a, quote, Watch X model to mark the device's 10-year anniversary. I cannot believe it has been 10 years. It promises to be the biggest overhaul yet. Mark Gurman is chief technology correspondent for Bloomberg News. He joins us from Los Angeles this afternoon. Mark, good afternoon. I can't believe we're talking about a device. First of all, I can't believe the watch is close to 10 years old. And we're talking about a device, you know, it could be 18 months in the future.
It's surprising, isn't it? 10 years already for the Apple Watch. It feels, you know, much shorter than that. And like you both said, this year's upgrades are going to be pretty muted, more on the processor side, same overall design. But the company is working on a longer-term watch that some inside the company are nicknaming the Watch 10, like the iPhone 10 from 6 years ago. And this would really celebrate the decade anniversary of the Apple Watch, right? It'll either come next year or the year after. And it's interesting. The original Apple Watch was announced in 2014. So 2024 would be a decade, but it didn't go on sale until 2015. So that's really the decade anniversary. So you've got a little wiggle room there.
Well, so are they changing their thinking, though, about the Apple Watch? As you write in your reporting, like from year to year, sometimes it's not such a big change. So are they starting to think at all about that maybe they shouldn't be releasing every year? Or is that a strategy that actually is pretty effective in terms of pulling in new people?
Yeah, there's been some discussion about moving to a 1.5 or 2 year upgrade cycle to match the iPad, some of the Macs. It's really only the iPhone and the Apple Watch at this point that's on that annual update cadence. And the reason why is because you're really not getting a ton new on an annual basis. So they're left coming out with these minor updates, 4 or 5 years in a row, instead of being able to do these more meaningful updates, every 2 to 3 years, right? And so that discussion didn't go anywhere. It's still important to add new features, even if it's minimal, every year. That's because you're not trying to just get people who bought the watch the year prior, like you may with the phone. You're trying to get people who haven't bought a watch in 3 years. You're trying to get people who wear Samsung or Fitbit watches. Or you're trying to bring in people who are new to the smartwatch.
Yeah, you just described Carol and me. Carol's Apple Watch is... Mark, I've been asking you this question for 3 years.
Antiques Roadshow is calling. We'd like to feature your
Carol
watch.
literally has the second Apple Watch. I'm like, I don't even know how this thing still works. Mark is just like, can't believe it either.
So pathetic.
I have yet to buy an Apple Watch, and every year I'm like, this could be the year. I kind of like the sleep tracking stuff. I really like the health stuff. The other part of the thing that I really like, I think, Mark, is just being able to read my texts while I'm commuting home on a bicycle, which actually could be really helpful, not pulling my phone out all the time to do that. Is this the year, or should Carol and I wait until the 10? The X,
I think pulling out your watch while riding a bicycle is probably not so safe either. But certainly, this year is going to be as good a year as ever to buy the watch because you're getting all the upgrades that came out over the last several years, right? Plus whatever new they have this year. But at the same time, this revamp is right around the corner, right? So if you haven't bought one yet, maybe it's worth waiting.
All right, wait, so help me, because every once in a while I'm like, Mark, what did I do? So I'm sitting here it is the second year of the watch. At this point, should I just bite the bullet and wait for that in a year when it has the Watch X out?
Yeah, it's really up to you. I mean, if you rely on your Apple Watch and you're having issues with it, like some of the things that can happen with an Apple Watch over, if you keep it for 3, 4, 5 years, is the performance really degrades as they add new software updates. It could be really sluggish and almost impossible to use. The other thing is the battery, right? The battery capacity drains over time. And, if you're wearing it, you want to be able to get to the evening when you charge it overnight. So certainly, if your watch is already getting pretty long in the tooth, you may consider upgrading this year.
I have to say, I don't even think it syncs with the phone anymore. It's so pathetic.
But it doesn't even work, Carol.
I do want to ask you, though, because I have some really nice bands. Is that going to be a big change? So with the X, are they going to change the way the bands connect?
If you take out your band from your Apple Watch today and you look at the slot where you have to put the band in, you can see it's actually a pretty chunky area, right? It's much bigger than I think people who would expect, right? Because the bands are so thin and slim and the Apple Watch is so small. And cutting that chunk out of both sides of the watch to get that band in actually could really be better used. Maybe a bigger battery, maybe more components, more sensors. And so they are looking at ways to sort of make better use of that area, fill that gap, and create a new system to attach the Apple Watch bands, maybe something with magnets, maybe something that takes up less space. So I do anticipate that happening. I do.
Okay, I want to clarify something because I'm getting a lot of messages. People are concerned that I'm actually texting while I'm riding a bicycle. I'm not at all. I'm riding my bike home from work. My phone is in my pocket. I feel a buzz. When I stop at a stoplight, I'll look at the text
Wife of
message,
Stenovic.
okay?
He's not doing it.
I'm not doing it. And, it is just, my wife and I texting each other like, hey, when are you going to be home? When are you going to be home? That sort of thing. So, guys, I'm not texting and biking. So everyone needs to stop getting mad at me.
I mean, Mark, what's great about, too, is you always put in perspective the watch and the importance it is to Apple. I mean, it's not something to just kind of laugh at anymore, is it?
Oh, certainly not. This very much could be an $8 billion a quarter business, right? I mean, it has probably eclipsed the iPad and the Mac individually at this point. They don't break it out. At this point, I'm not entirely sure why they don't break it out. I think it's because it's such a big part of the wearables, home, and accessories category that they don't want to sort of suck any of the revenue out of that larger category. They rather show a bigger number by comboing it all up. That's a $40 billion a year business at this point. So bigger than the Mac, bigger than the iPad, certainly one of the biggest businesses in all of technology from a consumer standpoint. So certainly a huge part of the Apple story.
It's also a huge part of Tim Cook's story because it was a new product. Correct me if I'm wrong, but this was...
No, you're right.
This was like the first new product category introduced under Tim Cook.
It was the first new product category under Tim Cook, but I think they have to break it away from the iPhone at this point, right? I think it should be able to be a fully standalone device that does not require an iPhone. If you want it to be your only phone, you can have it as your only phone. If you want to sync with an Android phone, you should be able to sync with an Android phone. I certainly think they should try to make it an individualized product, just like they have with every other Apple device.
So bottom line, thank you, Mark Gurman, for my personal shopping advice. But I mean, so is it basically the X is going to be the first really big design change? Or is it going to be also technology-wise a lot of changes, or it won't be that much different?
Call it X or 10.
But is the technology not going to be that much different from what comes out this year?
It's really going to be the third biggest new design in the history of the Apple Watch. There was the Apple Watch Series 4 in 2018, and so there's really two lines of Apple Watches now. There's like the regular Apple Watches, along with the SEs, and then there's also the Apple Watch Ultra. And the Apple Watch Ultra, that has a new design, a new look, more for the Garmin crowd, right? Maybe that's what Tim should get if he's going to use it while biking, something a little bit more durable.
Yeah, sounds good to me.
That was a new design as well. So this will really be that third design. In terms of the underlying technology, there's a couple really big things that Apple is working on for the Apple Watch. They want to get at least one of these into the Apple Watch 10. I don't think they'll both make it. I think these are things that are going to be added over time.
Okay.
Two new big pieces of tech: blood pressure monitoring,
right,
to be able to track your blood pressure, and the other is a new screen technology called micro LED, which looks phenomenal. It looks like painted glass. So those certainly are coming down the road too.
Good stuff.
Did you get your answer, Carol? What are you going to do? Are you going to buy or are you going to wait?
I really need a new watch. All right. Mark Gurman, thank you as always. So appreciate it. Mark Gurman is Chief Technology Correspondent at Bloomberg News on the phone from Los Angeles. And again, just so much when it comes to the comings and goings of all
Didn't even
things
get to talk
Apple.
to health stuff, which is what I want to talk about next time.
Oh, okay.
So much health stuff.
Sorry
No, that's
about that.
okay.
I don't know what I'm going to do. What are you going to do? You going to wait?
I think I'll wait.
All right. All right, right now, no waiting, though, for world and national news. Nancy Lyons is on it, as she always is. Let's head to D.C. Hey, Nance.
Thanks, Carol. We're waiting to see if a grand jury indictment against former President Trump might be issued today in Atlanta, not later in the week, as previously believed. The New York Times is reporting the presiding judge in the 2020 election investigation told deputies in his courtroom they need to keep the courthouse and courtroom open beyond the normal closing time today. The New York Times is also reporting two of the witnesses expected to testify tomorrow, including former Lieutenant Governor Jeff Duncan, were actually called in to testify today. The death toll is nearing 100 in Maui, where out-of-control wildfires wiped out the town of Lahaina last week. Oprah Winfrey has a home on the island. She's been volunteering at an evacuation center nearby.
You would see people lined up, cots right next to each other. You would see people with all of their worldly possessions in, like a small garbage bag.
Officials are predicting they could find 10 to 20 bodies a day for the next several days. The business community is beginning to step up in the aftermath of what's now being described as the nation's worst wildfire disaster in more than a century.
Jefferies Financial Group says it will donate 100% of its proceeds from equity and fixed income trading this Wednesday to support those affected by the Maui wildfires. The investment bank is also planning a direct $1 million payment, and it's giving its 5,300 employees the opportunity to make their own personal donations. Jefferies has offered humanitarian relief in the past. It was one of the first U.S. banks to provide direct support for Ukraine after Russia's invasion last year. Nathan Hager, Bloomberg Radio.
President Biden plans to keep talking up Bidenomics on the campaign trail. He's leading a multi-state blitz this week to mark the one-year anniversary of the Inflation Reduction Act, and he'll also be touting the success of the measure. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And it is 4:40 on Wall Street. We check the markets for you all day long here at Bloomberg. I'm Denise Pellegrini. Stocks did finish higher. Some tech stocks, some notable tech stocks leading the way for us, but not everyone is a believer. Take Drew Mattis. He's chief market strategist over at MetLife, and he says he's really worried about all the imbalances in the economy.
For the medium term, I'm trying to figure out when the recession occurs, how deep it's going to be, what's going to cause it. And quite frankly, kind of the longer the imbalances persist, the worse the recession will be, and the more you have to worry about it. And so things with regard to housing, housing should be repricing. The fact that it's not is not a sign of health. It's a sign of dysfunction. And I think that that's something that could come back to bite us.
And Mattis with us there on the Bloomberg Surveillance podcast. And we'll get more on the housing market tomorrow. We'll be getting earnings results from Home Depot. Those shares finished slightly lower today. The Dow, it finished up fractionally, up 26 points. The S&P 500 up 0.6%, 26 points as well. And the S&P 500, the NASDAQ, the big winner of the day, up 143 points. S&P, I should mention, you should thank NVIDIA for much of those gains because NVIDIA gained more than 7%. The yield on the 10-year right now, close to highs of the day, up 4.2% right now. NYMEX crude and spot gold, they both finished the U.S. session lower. And shares of U.S. Steel, well, they gained about 37% in the session after getting a second takeover offer. This one, that $7.8 billion cash offer from Esmark, and that trumped an earlier bid from Cleveland Cliffs. Esmark isn't saying, though, how it intends to fund that offer, so we'll see. And that is a Bloomberg Business Flash.
Yeah, Denise, you mentioned NVIDIA, top number one gainer in the S&P and NASDAQ 100 today on that call.
What about this year? Probably this year as well.
Yeah, it's kind of outperforming.
Exactly. Hey, Carol, did you see this ad from the Republican National Committee? It came out when President Biden said he was running again. Take a listen.
This just in, we can now call the 2024 presidential race for Joe Biden.
This morning, and in Bolton, China, invades Taiwan.
Financial markets are in free fall as 500 regional banks have shuttered their doors.
Border agents were overrun by a surge of 80,000 illegals yesterday evening.
Officials closed the city of San Francisco this morning, citing the escalating crime and fentanyl crisis.
Who's in charge here? It feels like the train is coming off the tracks.
That was an ad from the Republican National Committee. And for those who aren't watching us on YouTube or on Bloomberg Originals, you can see images of a Chinese attack on Taiwan. They lead to scenes of looted banks, armed soldiers enforcing martial law in San Francisco. That narrator insinuating that it's all happening under President Biden's watch. Well, it turns out those scenarios are actually AI. The images, Carol, they look like real life.
It absolutely looks like real life. I mean, this is something, we've been talking about deep fakes, but, generative AI, the explosion really just takes it to another level. And we thought moderating user-generated content was tough, kind of just in a regular social media world. But, when you think about generative AI, it's a whole other world.
That's why we're very pleased to have with us this afternoon Bryce Maddox, CEO and co-founder of TaskUs. It's a publicly traded microcap company. It's hired by big social media, gaming, and streaming companies and more to moderate content. He joins us on Zoom from Jackson Hole, Wyoming. Bryce, good to have you with us. How are you?
Yeah, thanks so much for having me. Doing great.
Good. So it's so interesting to start seeing this type of content being posted. And the RNC was clear to say that this was AI generated, and it made a lot of news, the fact that it was AI generated. But you can do deep fakes, and that's exactly what they are. They're deep fakes. And you don't come out and tell people that it's AI generated. How do you moderate for that?
Yeah, well, I mean, generative AI has the potential to create nearly infinite amounts of content. We're talking deep fakes, political misinformation, and hate speech. At TaskUs, our trust and safety teams are made up of thousands of moderators who are going through millions of pieces of content for large social networks, dating apps, online gaming, and streaming services. And we see almost limitless potential for our work in this area as generative AI, as you say, is creating such an incredible amount of content.
But how do you moderate it?
Yeah, so we have a standard that we hold all of our trust and safety teammates to, extensive training protocols. At this stage, humans are generally can be trained to be on top of enough to see what is a deep fake and what is real.
Really? So
obviously the future is quite scary.
I'm surprised to hear that because I mean, even years ago there were these. I've seen videos of like Trump and Biden debating each other, and they're saying crazy stuff. So it's not real. But if they were saying stuff, and these are exercises that have been put out, you're saying that the last line of defense is just regular human beings.
There's going to be a combination of technology and talented human beings who are going to do this. There absolutely is the ability to use generative AI for good, algorithms that can tell whether the content was produced by a large language model or image generation model. But at this stage, most of the work we're doing is using human experts who have been trained to determine whether something is a deep fake or the authentic thing.
Okay, Bryce, now you have me worried because we've had a tough time really policing social media content. There's no way just the amount of stuff that's out there. So, I mean, how do you pick and choose among like your customers? How do you, the work you do with for them, how do you guys pick and choose what ultimately gets policed? Is there some algorithm that says, okay, these are really troubled areas, spend more, like how does it work? How do you do that? How do you filter through?
There's a combination of signals that we're using. There are algorithms that are reviewing all of the content that is posted to flag content that looks more suspicious, is more likely to be hate speech. There are also user-generated signals. Many of the large social networks and dating apps will use user flags to trigger an investigation by one of our trust and safety professionals. So it's not as if we're reviewing every single piece of content. At this point, that would be impossible. Right. But we're filtering down to the content that we think is most likely to be misleading and nefarious.
But is there a little bit of a whack-a-mole that as soon as you kind of have figured out somebody who's a problem, they've moved on to a different identifier, if you will, and so it's really difficult to keep up?
It is a bit of a game of cat and mouse, but fortunately, we're working with some of the most advanced technology companies in the world. And
like a Meta?
We feel like it. Well, yeah, I mean, we work with many large social networks, many of the largest dating applications in the world.
There aren't that many large social networks left.
Yeah, well, we work with most of them.
Okay,
and there certainly is, a level of expertise that's required to do this at scale.
You know what's scary about this, Bryce, is that it's like we live in a world where an authority figure can tell somebody that something's not true, and that person won't believe it. I mean, we live in a world where a good portion of the population doesn't believe that Biden was fairly elected president, and that, President Trump, despite what the election results said, should be the actual president. So like, how do you control for that?
Yeah, I mean, right now, there's clearly an amount of distrust. And I think user-generated content has played a role in that. It is the responsibility of the social networks and of professional service providers like TaskUs to do a better job of policing this content. And there's I think a difference between removing true hate speech and clear misinformation, and then some of the more borderline decisions where we tend not to get involved in things like do you leave up a certain piece of content or not,
right,
because of potential misinformation. We leave those decisions to the social networks themselves. But 99% of the content that we're dealing with,
right,
it's clearly offensive and violates the terms of use for these platforms.
Bryce, forgive me, you got to be quick, like 30 seconds. But
sure.
Your stock is down almost 40%. You guys have recently revised down your fiscal year 2023 sales forecast. If this is going to be so important, why isn't there more growth? Very quickly, like 20 seconds.
Yeah, we're seeing a lot of our clients make big efficiency gains and they're reducing their cost structure. So they're both eliminated internal layoffs, as you've seen across a lot of technology companies and third-party service providers. The good news is that I think we're closer to the end than the beginning of that trend.
Right.
And we'll do over $900 million in revenue, over
Got it.
$200 million in EBITDA, over $100 million in free cash flow.
Bryce Maddox, CEO of Taskus. Thank you.
Your company news headlines on Bloomberg Radio.
And from Bloomberg World Headquarters, I'm Denise Pellegrini. We kept a very close eye on shares of U.S. Steel all day, and they did not disappoint. They finished just about 37% higher. That's after getting that second takeover offer, a $7.8 billion cash offer from S-Mark, trumping an earlier bid from Cleveland Cliffs. S-Mark isn't saying, though, how it intends to fund that offer. Tesla cutting prices again in China. Bloomberg's Steve Rappaport tracking those developments.
Denise, Tesla marked down the long-range and performance versions of its Model Y SUV by $1,900. That's according to a post on the EV maker's Weibo account. Auto stocks tumbled today as investors fear Elon Musk's latest discount will reignite an international price war. Tesla threw the first silo in that conflict by dropping prices late last year. Several rounds of price cuts have already cut into Tesla's gross profit margin. Musk warned last month that the company would need to keep offering discounts if interest rates continue to rise. Denise?
All right, thank you, Steve. And Bloomberg's Steve Rappaport before they're talking about the EV makers' shares plunging, not the other automakers overall. Shares of PayPal, they closed almost 3% higher. PayPal is naming Intuit's Alex Chris as the new CEO, replacing Dan Schulman. Chris most recently led Intuit's QuickBooks and MailChimp units. And Apple planning a splashy upgrade for its smartwatch, but you won't see it this year. You'll have to wait till 2024. And AI could be the path to making almost $1 million. Wall Street Journal reports salaries for AI-related skills are skyrocketing. You can pull in six figures, mid-six-figure salaries, plus bonuses if you've got the right portfolio. And those are some of the company stories we're following.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. I'm Tim Stenivek. That's Carol Messer. Let's get a check on the latest world and national news. Nancy Lyons is in the Bloomberg 99.1 newsroom in Washington, D.C. Hey, Nance.
Thanks, Tim. Former President Trump could be facing another indictment this week, which would be the fourth. It would be in connection with alleged election tampering in Georgia. The district attorney in the case, Bonnie Willis, has been presenting her findings before the grand jury today, and the judge overseeing that case has ordered the courthouse to remain open past normal business hours today. Greg Bluestein is with the Atlanta Journal-Constitution and says the city's law enforcement officials are ready.
They have been preparing for this for months, literally months. Some law enforcement officials actually even went to Miami and to New York to observe how law enforcement officials in those jurisdictions were handling the earlier indictments against the former president. But there is security, there are barricades all around the courthouse.
Greg Bluestein spoke with Bloomberg Sound On. FEMA Administrator Deanne Criswell says more than 300 government officials are on the ground in Maui, helping those who've been left homeless by those wildfires that scorched the entire town of Lahaina. She says they've implemented the Transitional Sheltering Program.
This is FEMA's hotel program, and this will allow them to move from shelters into pre-identified hotels or motels temporarily as they develop their long-term housing strategies. This is in coordination with the governor, as he has also stood up a program to provide Airbnb rooms or other hotel rooms to support residents.
Criswell says each family is also eligible to receive $700 immediately to help with some of the initial basics like food, water, and first aid. 6 white former Mississippi law officers who call themselves the Goon Squad have pleaded guilty to state charges for torturing 2 black men in a racist assault. Each of them received individual plea agreements that include prison sentences ranging from 5 to 30 years. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Tim and Carol.
All right, Nance, thank you so much. Carol Masser along with Tim Stenivek live in our Bloomberg Interactive Brokers studio on YouTube and Bloomberg Originals. All right, so a lot going on. We said it's not been in a sleepy summer here in this kind of the waning days of our summer. But among the most read on the Bloomberg, it's funny, my husband sent it to me on my phone. It's like coming across Twitter. It's coming from Dow Jones Wall Street Journal. And it has to do with Michael Orr, the retired football player. His upbringing was chronicled first in the book The Blind Side, that was later made into a hit movie with Sandra Bullock playing the mother. And he has filed a petition with the Tennessee court that calls the central narrative of the feel-good story a lie.
Yeah, this story, as you mentioned, Carol, by Andrew Beaton in the Wall Street Journal. I'm going to read right from it because I want to make sure I get this right. So, Orr's petition alleges that Sean and Leanne Toohey, how did I say that? Toohey, yeah. Who took him in as a teenager when he was a rising football star, never adopted him and instead had him sign papers for a conservatorship, which he says they used to make millions off his name and likeness.
Wow. The filing in a probate court, Shelby County, Tennessee, says the Tuohys, quote, have enriched themselves at the expense, end quote, of Orr, and that he only, quote, discovered this lie, end quote, earlier this year. It says Orr was duped into the conservatorship, which has cost him the windfalls of his well-known life story. Wow. This would be like, if it's true.
We should note that the Wall Street Journal says